go from there. But what we're going to go over today is what business credit is and what business credit isn't. Because I really experience a lot of conversations with business owners that are like, yeah, I've got business credit. This is what I'm doing. And it's like, yeah, you're not actually, because you don't have these pieces connected yet. So the biggest part was just helping people understand what it is, what it isn't. I'm a very interactive presenter, so the more questions you guys have, and the more you guys interact with me, the I think the better the calls go, because I like real life experiences, because everybody's unique, everybody's got different experiences that they've come across that have affected them one way or another. So if one person asks a question and I can answer it, it may, be a question that somebody else was already thinking of that just gets answered in that same stride. So what we'll do is I'll go over the basics. We'll touch on the differences of personal credit, business credit, and then we'll kind of get into the meat of it. And I'll try to have this wrapped up around like 12:30 and then have room for extra questions afterwards. So, but starting right off the bat, I I would like to know, like, what do you guys think business credit is in your own words?
I would say that is the business's ability to borrow money standing on its own two legs without a personal guarantee.
Yep, that's exactly right. And that stems towards all the other things that we have, right? So basically, business credit is built off of your EIN number, which is your social security number for your business. And some of this is going to be real basic for everybody. So just stick with me as I kind of get through this part. But what happens is people think they've got their EIN number, and then they go and apply for a business credit card like Chase, Amex, Capital One, Spark, whatever. And voila, I have business credit and I'm establishing a credit profile for my business. What a lot of people don't know is that unless you have a Duns and Bradstreet number that is set up properly, where your business address matches what's on the Secretary of State, what's on Duns and Bradstreet, what's on Business Experian, what's on Business Equifax, is that's a major piece of getting in there. So you got to have a Duns and Bradstreet number, and then all of your information in Duns and Bradstreet has to be accurate across everything. So if you've moved business locations recently and you haven't updated that, you're probably not acquiring any business credit, because when it reports and there's multiple addresses on those files, it bounces around and it goes, I don't know who this is or what they are, and then it just goes into the ether and nothing happens. So some of those business credit cards report to the business bureaus, but unless you've taken the additional steps of what Ty Crandall calls the fundability foundation of making sure that your address matches. Some of you are probably going to be offended by this because I saw what the email addresses were. If your business email ends in Gmail, Yahoo, Hotmail, Outlook, etc., please spend the $21 a month now, right after this call. Do yourselves a favor and get a business email address through a Google My Business profile. You will look significantly more professional to lenders, and it's imperative for you to have this if you're going to build business credit. And it just, as a whole, it just makes you look more professional as a business, right? Like if I get an email from somebody that I'm doing work with and they respond back to me with their business name at Gmail, like I'm already kind of a little skeptical about it. Versus if I get somebody that sends me an email and it's, sales or info or their name at theirbusiness.com, it just gives you a little bit of professionalism when that happens. So that's a step. A business phone number that's registered with 411. You can do that through RingCentral, Twilio. There are a couple other vendors out there. Otherwise, you can, if you have a separate business line, you can establish that with 411 itself by just going to Google 411 and setting up a phone number. It's fairly easy. So you got those pieces in place. Then you need to make sure that your entity type is right. So if you're an LLC, Obviously, some sole proprietors out there have EIN numbers. I hate to break this to you, but if you're a sole proprietor and you're not set up as an LLC already, banks will look at you like you're a fake business. Okay? That looks like a trial business to lenders. So if this is you, you need to just take the time, pay the money, and form an LLC. There's so many benefits for it. Obviously, liability issues. But that also affects your time in business, which I'll get to later on in this conversation. They won't consider your time in business from the time you started a sole proprietorship. It's the time you filed Secretary of State paperwork for your LLC or your corporation. That's when your time in business timer starts. So that's an important piece of this. If any of you have ever gone to try to get a loan and they're like, oh, sorry, you haven't been in business for a year yet. We can't touch you. Or maybe it's 2 years, depending on the lender. So we have that aspect of it. If you have any licenses in your state, you need to make sure that you have those all paid for and squared away and registered properly. If you've got, oh my gosh, bank account, business bank accounts. When you get an EIN, you need to get a business bank account. I always recommend if you're going to start out with a business bank account, starting out with one of the major lenders, just because then you're building a relationship with them. It's not necessary. It's not critical. You'll be able to still get a good business bank account with a local credit union or a local bank. Just understand that they're not going to give you the programs that you're going to want access to as a business owner later on. So these are all part of like your foundation. And if you don't have this foundation in place, you're not building any business credit. And that's probably the most messed up part that I come across for owners is they're like, yep, I know I'm establishing business credit. I pull a report and there's nothing. I do a quick little search on all of their documents and I'm like, you're not even registered with Duns and Bradstreet. What are you talking about? Right? Or your address. I pulled you up in a Secretary of State search or a DUNS search and I got 4 different addresses with your name on it. Which one's your actual address? Like you're confusing the system. And in some cases, you could even be confusing the lenders that pull you on soft pulls because their algorithm's going to go, why are there 4 locations? This looks like fraud. Right? Touch base on us home office people. Either if you're a home office and you're doing business credit, the cheapest thing to do is to do a registered agent at a separate location that's a commercial address, or pay for a virtual address. Those can cost anywhere from $25 to $70 a month. Some of them have different benefits. If you're in a bigger city, some of the virtual offices will actually give you office space to go into for meetings and stuff. So there are some benefits to pay a little bit more, but lenders don't look favorably on home addresses if you're applying for a business loan. And if you think about it, it makes a ton of sense. So like for me, where I live, I have a PO box. So the state forces me to register through a registered agent, which is fine because I just use my registered agent address as my business address and then I don't have any issues. So these are all little steps to take into consideration. You know, if any one of these steps is off just slightly, you're not going to be building business credit at all for your company. Okay. The second part of this is business credit is a very intentional form of credit. It has to be used. It's a pay to win system. So you have to spend money to work the system. If you're not willing to spend money to do it, you're not going to grow anything. It's going to take effort. So if you don't want to put in the work, you're not going to get the results. Kind of like anything in life, right? Like when we go to work out or really do anything, like if we don't put in the work, then we're not going to have the results that we want. So it takes some time and it takes some thought. It's also a very the first steps of it are very monotonous and boring, and this is where everybody gets caught up because it's a lot of vendor and store credits. So in order to get through tier 1 and tier 2, you have to be willing and creative sometimes to find ways to spend a minimum of $50 a month on some of these vendor accounts. Like right now, I just ordered some tissue paper and like toilet paper for my house through Uline. It was way more expensive than going to the store, but I needed to get a trade line added to get up to tier 2 for myself. So business credit it's a pay to win system. You don't need to pay anybody at Duns and Bradstreet to get a Duns number. You can do that all for free. Duns and Bradstreet in and of itself is a racketeering scheme, I'm convinced. But we need them because that number is your API key that gets you access to this business credit world. If you don't have an EIN and you don't have a DUNS number, there's no business credit. They can't happen. So get those things established. Make sure that you're all fundable by going through those steps. And I have a list of like what the fundability steps look like. And then you're gonna spend. Maybe you already are spending with different vendors already. If you're a construction company or a HVAC company or home service company, whatever, you probably already have like expenses that you could be putting onto your business credit, like fuel, supplies through Granger Supply, Tractor Supply, Home Depot, Lowe's, all those kind of things. Like those all are accounts that you can sign up for and have vendor credits with. Us home office people, we've got to get a little bit more creative to get off the ground because A, we don't have a ton of expenses, and B, we don't have a ton of expenses. So like you got to be a little crazy and creative to do it. eCredible is a service that reports to the business bureaus and is really nice because it will actually take any of your utility bills, any of your like internet bills, your rent for your building that you're in, and it will actually take it and report that to the business bureau so that you're collecting it and reporting it. That's also a service that you can use to report your payroll. So business credit loves to be used and it loves to be paid off earlier on time. And this is one of the major differentiators between business credit and personal credit. Who's paid off a personal credit card and had their personal credit score drop like 30 to 60 points right afterwards because they paid too much? Right? Like one of the most frustrating things about personal credit. Business credit, if you pay it off early, it's actually going to go, hey, this guy is reliable. This business owner is trustworthy. We're going to increase their credit line because they pay on time. They're consistent. They haven't missed a payment. And so it grows because it likes to be used and it likes to get paid off. However, on the flip side, if you miss a payment, even by a day, it's going to slap you significantly harder than a personal credit will. So on those personal business cards that we personally guaranteed, you can sometimes be late 30 to 60 days and they won't hit you. The problem though is that when they do hit you, they tend to hit you really hard. And it's usually unexpected. So like business credit, if I miss this payment, it's gonna ding me. And it takes a little bit more time to get it up and running and to build that trust back up again, but it's there. So that really is the major difference of business credit and personal. Is business credit likes to get utilized. You have to spend money to grow it, and you have to make sure that you're paying it off early. Business credit companies don't report to the bureaus like they do on personal credit. So a company that you're a vendor with, or a company you got set up for store credit or vendor, you need to have a spreadsheet, is usually what I say, to track who they are, what accounts you signed up for, your account number, and then your high credit limit on each account number. Because when we pull your business credit report, it won't show up by name on there. And they do that to protect those vendors. Because you can imagine if Pilot Flying J was listed on everybody's business vendor line, Shell could come in and buy those lines and see who everybody has under Pilot Flying J and then solicit all their customers away. So they do that to protect the vendor companies that allow to report. Not everybody reports the business credit. Less than 8% of all vendor creditors and lenders report to the business credit world. Why? Because it costs them money. How do we fix this? We fix this by when we come across a supplier that we're working with that doesn't report, we ask them, hey, do you report to the business credit bureaus? And if not, why? And would you be willing to? And what we're seeing happen now is more business owners that are doing this. There's actually become an increase in the marketplace of vendors, creditors, and lenders that are starting to be willing to pay that fee to report, which is a positive thing because that means that we're getting access to more of the type of lending and credits and net pays that we want as business owners. because ultimately our goal should be to get off of our personal credit as much as we can. So that's why when people are like, well, I'm using these people already for this service, I should have business credit. It's like, well, chances are those people aren't reporting because it costs them money. But if you put some pressure on them, they might. The great news is you can manually upload some of that stuff and get it to report to your trade line. So you're still capturing that expense in order to grow your business credit line. So as you're going through this stuff, you probably already had instances where you're like, yeah, like I bought my piece of equipment through, this manufacturer and they said it would report to my business. The reality is you're still personally guaranteeing it. It's not reporting to your personal credit, but if you miss a payment on there for more than 60 days, it's going to come back and hit you. And it's probably not even reporting to anything because they probably haven't paid to report to the business bureaus. Some of the bigger manufacturers out there will, for vehicles and equipment and that kind of stuff. But some of the smaller local dealerships that you go to buy stuff, they won't, unless you finance through like the actual like manufacturer. So these are all things that like when I'm working with clients, the stuff that I'm educating and on asking. If you're going to go and you're going to buy a new piece of equipment or vehicle, ask questions. Who are you financing this with? Who's it going through? Is it going to be on my business or is it going to be on myself? Am I going to have to personally guarantee this? Is it going to report? Is it not? And just kind of build up an idea of what it is before you go in. All the lenders that I broker with are business credit friendly lenders. But if you don't have a business credit score, then they're going to go off of your personal score. And that's where they change from a soft pull on your personal credit to a hard pull on your personal credit. Does anybody know the difference between a soft pull and a hard pull? So a soft pull is just a quick reference check that
It's
doesn't
off your
change your credit
checking
score.
history, right?
Yeah.
Yeah.
Yep. So it's just a soft look at you to see what everything looks like and make sure there's no red flags, right? No delinquencies, repos, anything like that. A hard pull is when they actually pull your entire credit report so that they can see every single person that you're paying and all your histories and all that kind of stuff. Those will hit you usually 20 to 30 points per, and that's what's called inquiries on your personal credit. So we want to avoid those as much as possible. It's not always possible, but as a business owner, when you're doing those types of loans for equipment and vehicles and everything else, you want to avoid as many inquiries as you can by having a good business credit score, because those inquiries, as we know, stack and they hurt your credit. And it can be pretty significant if you have a lot of them. And even if your credit's a 750 and you've had like more than 8 or 9 inquiries in a month, a lot of lenders are just going to go, sorry, you've had too many inquiries. We're not going to even look at you, which I think is the dumbest thing in the world. But I've seen that plenty of times in automotive as I've done lending on that side. So those are, again, some of the differences of your personal and your business. Your business, you can pull business credit as many times as you want. And companies that are pulling your business credit don't even need your permission, and it doesn't report or doesn't hurt you. Okay. In a matter of fact, like there are probably companies out there that you've worked with or gone into a contract with that have pulled your business credit and made a decision about you based off of it before they ever talked to you. And that decision could have been probably bad, but could be good too if you have a good business credit score. Insurance companies look at your business credit and decide upon what kind of rates and premiums you would qualify for based on your business credit score as well. It is part of their underwriting equation. So there are a lot of different areas that this affects. Okay. Your personal credit is still going to be needed. So here's where we're going to say, like, business credit is really good at coming in and taking over operational costs of your business, right? So your credit cards, equipment, vehicles, vendor credit lines, net pay stuff. That's stuff that business credit is really good at absorbing and taking over for you from your personal credit. And that's where it works really well in existing. So if you've got inventory that you need purchased, new vehicles or new equipment, that's where business credit is going to shine. And that's how most of the businesses that I work with use it to protect their personal credit for bigger purchases, right? Because there are going to be purchases until you're probably a $50 million a year company that are always going to require a personal guarantee on it, like your commercial property purchases, buildings. SBA is always going to require a personal guarantee on it and look at your personal information no matter what. That's just the way the SBA is set up. However, the SBA score also takes into consideration your business credit score. So a lot of SBA lenders will tell you, oh, your SBA score is a 160, so we can get you done. What they didn't tell you was that if you had a business credit score of 80 plus, your SBA score would have been around a 230, which would have given you much better terms, probably a longer term, potentially better interest rates, potentially more money, right? So that's another spot that business credit is really good to help and supplement. At the end of the day, it's good to have a good personal credit score, but it's important to understand where do I use my personal credit and where do I offset myself with business credit? If you are a business and you have a lot of employees that are driving around vehicles and they're using credit cards for purchases, and those credit cards are business credit cards that you got through Chase or Capital One or whatever that you personally guaranteed, I would start first and foremost by getting off of those credit cards and either getting them gas cards or like fuel cards that they can use that also have the ability to pay for food and stuff on them, or get them onto just straight like business credit cards. And you can get some of those through like Divvy and Brex. Like they have a little bit different like style that they need to run, but you control it more. But get them off of those and get them off of the vehicles. You don't want personal guarantees on vehicles, even if they don't report, because that's an access point into your company. If you're ever in an accident or you get sued by somebody, that's a spot that a lawyer is going to look at. If you're a trucking company, get off of personal guarantees on your trucks because you're carrying already a ton of liability. You don't need to be exposing yourself to even more risk than you already are, right? If you got people operating heavy equipment or forklifts or anything like that, you don't want personal guarantees on that stuff. That is what lawyers look for if something happens in your company for them to be able to get access to your personal assets. So the big picture is all about protection, protecting yourself. The smaller picture is about, being able to be a financeable company without having to destroy your personal credit as you grow. So, that's really where business credit shines. What it doesn't do is not going to take over and allow you to make a bunch of big purchases. You're not going to be able to get everything immediately off of your personal credit, right? It takes time to grow and establish. You may come out working with me in 6 to 8 months, depending on your company size. For example, I've got a company right now that is doing $3.5 million a year. And we're coming up on 8 months with them, and their credit recommendation limit is around $780,000. So enough to get all of their vehicles and everything off of their personal credit. But it's not enough for them to go buy another commercial location with. Eventually it will be, because it will continue to grow and scale as they grow and scale. But for some, it's going to be smaller. For others, it's going to be more. It just really depends on the amount of expenses your company has and runs through it as to how fast it's going to grow. If you have a bunch of expenses and you're a bigger company, it's going to grow faster, especially in the first couple of years. If you're a smaller company that doesn't have a ton of expenses, it's going to grow a little slower. So we're going to have to build slowly on what we can and can't do with it and get it built up to a point where it will eventually be able to replace everything. So that's the way I work, I guess, with customers is let's figure out where you're going to be and how to start offsetting you and getting stuff fixed or replaced off your personal credit. And then let's start structuring in ways to build up and develop your business credit line. I have business owners that are office, they work out of their home office, that they've had business credit now, and they were able to buy a residential like rental property with business credit. So I mean, there are other avenues for those of us that are like, well, geez, I work in an office at home. Like, how does this apply to me? Like, it's bigger picture stuff for those of us that are in those situations of like, what do I want this to work for me, right? So that's kind of how you need to look at this whole thing is especially this year, right? We're in a market downturn. Things are a little bit unstable. Everybody's a little hesitant. Everybody seems to be tightening up. It's imperative as a business at this point in time to start going, all right, I need this because I need the security while we're in insecure times. And I want this because I want to still be aggressive and grow in market downturns so that when the market comes back, I'm in a position to really capitalize on it, right? We all know kind of the basis of all the other recessions we've been through. Those that are aggressive through market downturns come out a world better than the people that shrunk away and got scared. Right? How did those businesses do that? Well, a lot of them that were in that like initial like, medium 6-figure, high 6-figure range, low 7-figure range, understood and started utilizing business credit to grow and acquire assets and equipment and ROI, and started taking market share so that when the market shifted, they were already light years ahead of everybody else that was only paying cash and playing scared. So that's what sets those people apart and those businesses apart. So from a lending side of things, lenders will look at your business credit score and they'll do a soft pull on your personal credit. So for example, an equipment loan, if at first your business credit score doesn't show up, they're going to reference your personal credit. If your personal credit has any issues on it at all that are concerning, they're going to do a hard pull on it to see what is all going on and what you are, like what you look like. Typically, they'll only do a soft pull, but once in a while, they'll do a hard pull on you. In a lot of cases, they're still going to have a personal guarantee on your equipment until you've established comparable debt with them that's high enough, along with a high enough business credit score that you qualify for not having to have a personal guarantee on that. So just be mindful of that as you're growing and building relationships. And this is why I say it's important to have the right relationship early on with the right lender, because if you're just going to your local bank or credit union for everything, you're not building a comparable debt profile for the companies that matter, that are going to allow you to scale as a business, because they're not reporting anything to the business bureaus. They may not be reporting to your personal, but I can almost guarantee you they're not reporting anywhere, right? I've run into that enough in automotive where people come in, they're like, yeah, I got a loan for my car from my local bank, and I pull their credit score. I'm like, you're a ghost. Like, you don't exist. There's no history on you. And they're like, well, I've had this loan for 4 years with my local bank. I'm like, yeah, your local bank doesn't report to the bureaus at all, which there's a time and place for that. It's not a bad thing all the time, but it is when you are a person or a business that's ready to grow and scale into something bigger, and you go to do that, and the lender goes, oh, you want 3 excavators? And you're like, yeah, I do. I've got 3 through my local credit union. And that lender goes, oh, there's no history of those on you, so we can't do that. Right? So then you go back to the credit union, you're like, hey, I want 3 more excavators. You're like, sorry, that's too much debt for us to do with you. We can't do that. You're outside of our growth limits. You're too big for us. I run into that a lot. So it's really important to understand how this stuff all affects everything all the way through your business and how you're going to scale and grow this. Are there any questions about what I just talked about from anyone? Ian, yeah, I hear that a lot actually.
So what you reference Divian as like solely just business credit cards. I've got the Chase and the Cap One Spark card, right? That I personally guaranteed. Is Divian like the go-to with just a business credit card?
Divvy is nice because you can put the reason I say Divvy is nice is because it still works like a credit card, but you do have to load funds onto it. But you're at least managing those funds, right? So I'm going to give you an example of why it's an important way to do this. So I was just talking to a guy yesterday. He has 4 companies. He has a Chase Inc. card, an Amex card, a Capital One something, and then another Chase card for his companies. He has his employees, his accountants, everybody at those places have his cards and make payments and stuff. What happened just recently was somehow one of his cards fell through the crack and it was 60 days late. Meanwhile, he's in the middle of trying to finance a new home and his credit score just got slapped by 150 points because of the late pay on his business credit card because he personally guarantees it. Those business credit cards won't report to personal unless you have a delinquency on them. And then they'll come full force and knock the crap out of you when you don't expect it. So now he's in the middle of financing a new home. His personal credit just drops 150 points. The home lender that he's working with, as they always tell you, like, don't have stuff that affects your credit while we're going through the process, get a notification that his score just dropped 150 points, call him and say, hey, well, what's going on here? Your credit just dropped 150 points. And he's like, what do you mean? So he starts calling around, finds out that somebody at one of his companies missed his payment, and now he's 60 days late and just got slapped by, I think it was Chase that slapped him. So now he's trying to rectify this situation with his employees, and now he's trying to figure out what he's going to do on this home finance because it completely altered the terms of the deal that he thought he was going to get. I think he was saying that he thought from what the conversation with the loan officer was, it was probably going to increase his mortgage by like 3 to 5 points. Which, if any of you are aware of like what interest rates are right now, that sucks. And this is all stuff we can control, right? Like if you're a business and you have employees, they should never have access to a credit card that you have that has your personal guarantee on it because you are risking a ton of additional exposure and instances like this that can affect you personally. So that's where Divvy cards and like Brex cards and stuff, they're kind of a pain in the butt in some cases. But you're controlling that process. And then if something does happen where a missed payment happens, you're not getting personally docked for it in a way that can negatively affect you. So it can take a little bit more work. But as you grow as a business, if you're running, there are cards out there, like credit card companies, that if you're running like $500,000 to $1 million a year through your credit card, they'll get you onto corporate credit cards that don't report to EIN. Some of them, it's like 2 million a year through them. So like, you've got to be a little bit bigger of a business at that point in time, but you can get there. In the meantime, you need to understand the credit cards and how they work and how they can negatively come back and affect you. Because if you don't, you can have some really rude awakenings. Had to pay $40 to change your current limitation. Yep. Yep, that's exactly right, Amber. It's you have to pay to play and you have to pay to track stuff and you have to, be on top of it, especially if you're going to be scaling and growing as a company. Any other questions on what we just talked on, like touch base on?
Hey, Paul, what were the name of the Divian and Brex? What are those?
That's what they're called. They're Divvy and Brex. A
Divvy
Divvy
and
card and a
Brex.
Brex card. A lot of cases, you're not going to get access to those cards until you have 10 trade lines that you're paying on, or your company is generating like 500,000 or more a year. But you can get access to them if you have trade lines that you've already been reporting to. But the typical thing there is you need 10. Does everybody know what a trade line is when I mention that?
You talking about with like a supplier,
So that's part of
like a
it.
net 30 kind of thing?
That's part of it. Yep. So a trade line is considered anything that you're doing in your business that reports to the business bureaus. So it could be a loan. It could be a credit card payment because the major credit cards do report to the bureaus. It could be a net term, net pay. So we want a combination of all of those things in order to build up the trade line history of your business. But we also want a variety of those things because we want to build up the comparable debt history of your business as well. That's also as equally as important as the trade lines. Any other questions? Otherwise, I'll go into a couple of horror stories that I've run into as I've been talking with people.
Well, what are some good trade lines to start? If you have any trade lines right now, I don't have any expenses really in my business. Something I can start just to kind of like you said, like buy toilet paper from or something like that, just to get started.
So So where I tell startups, right, is the nice part about being a startup business is you don't really have to be generating revenue to be able to build your business credit. So for instance, I've got a friend of mine who is still a W-2 employee, but he is going to be leaving in another 6 months to start a business. He already knows what that business is. He started his LLC 6 months ago, and we started building him business credit. So for him, he just started paying the minimum on like Uline, Home Depot, Amazon Business. Got him a fuel card that he could use for his vehicle. And he has a credit card that he opened with his business, right? It's like a Chase, but it reports because we have his business set up properly. And in the next 6 months, he's going to have a fairly robust business credit score. His credit recommendation limit's probably going to be around like 50 to 75,000. But when he comes out and he's ready to go, not only is he going to have any types of line of credit that we grab with him while he's still a W-2 employee to maximize this, or an SBA, right? But he's also going to have access to probably hybrid credit lines under his business that they're just in his EIN number that will be, anywhere from like $50,000 to $100,000 of 0% for up to 18 months. So as soon as he comes out, because he took time to build this, he's going to have access to capital right out of the get-go to leverage and grow his business. And he already has a plan in place for how he's going to use it and how he's going to pay it back. That's the other important piece of this, right? Like you see advertisements all the time for credit card stacking companies. That's not business credit, right? All of those are just the business credit cards that are all tied to you personally. And I can tell you that they are usually not beneficial to the majority of people because the majority of people are incapable of managing that many credit cards and will ultimately end up missing payments and hurting themselves. So for you as a startup, it just depends on what your strategy is. If you've got $350 to $500 a month that you can spend on doing this, it's probably worth it because in 6 to 8 months, you'll have access to capital that you wouldn't have had access to before. Right? So there are benefits. You have to, it's a long play. It's not quick. In the grand scheme of things, I guess it is quick, but overall it's not a fast hit thing for you. But if you follow it and you do it well, the rewards of it are fairly significant for a business. So does that answer your question, Harvey and Glenn?
Yes, you're saying like a fuel card or something like that should be one of my first things to work on.
Yep, I've got one of the things that everybody on the call is gonna get is, I gotta complete it this afternoon, but it's just like a little workshop I threw together that has kind of all the tier 1 and tier 2 vendors and how to apply to them. And then also a video of how to get to like Duns and Bradstreet and set that all up so that you can start doing this on your own.
Nice. All right, thanks, I appreciate it.
Obviously, the fastest way to get through this is to pay to get into the software that I have and to have the guidance, right? Like that is if you do this on your own and you committed to doing this on your own, you may never get out of tier 2, right? Like the reality of it is there's just not enough information for a person to do this themselves, to really get out of the frustration zone unless you're getting guided by somebody that has done it before with a proven system in place that has all of the vendors and creditors that we know report and all that kind of stuff. You can, but it takes a lot longer. So, but for those that are just starting and don't necessarily have the money to pay somebody, you can still at least get started and get on the path so that when you are ready, you will have, that much already going in your favor. Any other questions?
If you have things that are personal guarantees like company vehicles, would you suggest trying to refinance those out to lenders that don't require that?
If you don't have a business credit score yet, no. Because it's not really going to benefit you at all, right? They're just going to put it back under, it might not report, but it's still going to be personally guaranteeing to you. You need to have a business credit score typically where we start to see businesses be able to get off of personal guarantees on vehicles and stuff, and it may not be all of them, is at a 80 plus paydex score, which is an equivalent of like a 720 personal credit score. And that's the paydex score is the Duns and Bradstreet score. The other scores that I like to take into consideration is business Experian, which I like to try to get that over 70. And then your business Equifax score is we try to get that over 425 before we start applying for through banks for business credit for that kind of stuff. Because all of those scores in combination really make up the strength of your business credit profile. And the stronger that looks, the higher your credit limit is. That's what those lenders are going to look at to go, yep, we can refinance these vehicles without it being in your personal name. It's going to get you access to like the commercial programs of like GM, Peterbilt, Freightliner, CAT, John Deere, Case, Ford, Toyota, right? And that's when you start kind of changing the entire game of this. Because once you get to those lines and the ability to do like actual commercial lending, it takes the amount of paperwork, the amount of documents, the amount of time that you have to do to apply for this stuff, and it significantly reduces it to the point where you just fill out a quick application, usually twice a year, depending, maybe once a year, and then you're in. And then it's as simple as a phone call. Hey, Stu, I need a new bed. You look, oh, yep, you've got plenty of room here. I'll get the bed shipped out today. Boom, you're done. Right. So like as a business owner, especially in like home service, and this is where I say it for like my business owners that are blue collar businesses, especially the ones that are doing 7 figures and up and are trying to scale. This is where this strategy really comes into play for you guys, because you'll see others in your field that you seem like they are just screaming, like they are growing so fast. And you're like, how are they doing this? Well, chances are they either had a really big investor or private equity partner that came in and took a huge chunk of their business, or they understood the business credit game, started building it, and started leveraging it to get just monstrous amounts of growth right when they were ready to do it.
You can check all those scores on Nav too, right?
Yep, Nav will tell you what they look like.
And I believe I've heard this in the past, but if you have a membership to Nav, they actually report that as a trade line.
Yep, Nav will report. They don't always report as a trade line. If you have 1 or 2 little things that are off on your like Duns and Bradstreet profile, but they will generally report.
Okay.
And I think it's either to the SBFE or to Duns and Bradstreet, which really, like, I like to get people on trade lines and like vendors that report to at least a minimum of like Experian or Equifax on top of DNB or SBFE. Because DNB and SBFE alone really don't do a whole lot in the eyes of all the other lenders and stuff out there. It's the combination of Experian and Equifax that really increases your score and your history.
Thank you.
So if we were to like, let's say I was to sign up for you and your services, is that like the first step that you take, is like essentially reviewing all of that, everything that's out there to make sure that's all tight, and setting
Yep.
them together to
Yeah.
accomplish
So,
whatever we want to?
yep. So for any guided services for business credit, it always starts with the first check of like, are you set up properly? Are there any discrepancies that we're seeing out there that we need to fix? And as we're going through it, like we'll even look for like old UCC filings that haven't been taken off on stuff that you don't owe. Like the other day I pulled a guy and he had like 24 UCC filings, and of those, like 18 of them weren't active anymore. So the company that he was financing through filed them, but then never removed them when he paid it off. So then we got to go through and get those removed. And those can cost $500 to $2,500 to get all those removed if they're bad enough. It's not always the case. But we always start from the very beginning. Like, are you set up properly in order to, increase your ability to get the scores and grow fast? Because we want to do this, and some businesses it takes a year to get a full score, but for most I'm seeing 6 to 8 months. And on top of that too, before everybody else goes, for anybody on the call that does want to sign up for my services, I'll take 10% off of my normal fees. So it's 1,995 is what my cost is. So I'll take 10% off of that. So $200 off for anybody that was on the live call today. For that, and that's lifetime access to the software. And then it's just $145 a month to work with me directly for my time, because what I end up doing with a lot of my clients is we end up looking at a lot of different aspects, because I also do the lending side, so I understand underwriting. So then we look at your profit and loss, we look at your financials, we look at your bank statements, and we prep you before we go and apply for loans, and I'll get you to the right type of lenders, even if it's not my lender set. Because to me, the most important part is taking care of you guys and making sure that you're getting somewhere that's beneficial, and matching your goals, right? Because not every lender is really strong at what it is that you do. And that's where people fall into these pits with local lenders and credit unions, is those local lenders and credit unions are tiny. They maybe have $4 billion of liquidity, right? So they're never going to let you off personal guarantees, no matter what. You need to get into like large regionals and mid-national size banks that have like $90 billion and up in liquidity in order to start getting onto some of these programs.
Do you have any personal relationships with lenders?
Yeah, yep. I work really closely. I've been building a relationship up here in Minnesota with a couple of business banking development managers for Huntington, US Bank, Wells Fargo, and First Western Mutual. And they actually send me a lot of their deals that they can't get done for me to be able to help them fix their credit, get them back, and then I refer people back to them too, because like one thing I didn't know until I started doing this was Huntington actually processes the most SBA loans of any business in the US. And they're a very startup friendly business. If you have proof of concept with good financials and a business plan, chances are you'll be able to get an SBA loan through them, where a lot of other banks will not allow you to do that because they put their rules and regulations on top of the SBAs. US Bank is really good at white collar industry. So for accounting, lawyers, that kind of stuff, US Bank is great. They suck for blue collar. They do not like working with blue collar businesses. But people don't know that. So somebody's like, here, just go to US Bank. And they're like, okay. And then they get denied and they never tell you why you got denied for it. So that's kind of the advantage that I give my clients when they work with me on that one-to-one, and where I charge that additional fee. Is like, if you got big loans that you're planning on, let's put a plan in place and make sure that we get the approval, right? For instance, the plumber I was working with just recently started working with me 4 months now, was never able to get an approval. He does $3.5 million a year. He's paying cash for everything. His employees had his debit card, all that kind of stuff. So it took 3 months, but we finally got him able to do funding. Like I got him lending for $100,000 of equipment, which he was doing rentals to keep his staff going. So he was renting vans for his guys to go out and work. So I finally was able to get him a loan. And then we finally got him set up on a bunch of net pay terms so that he wasn't doing cash on everything. So he was managing his cash flow more. So we're looking at here in the next 3 months of like refinancing his entire fleet. Thanks, Stu. Refinancing his entire fleet for him of new vehicles, because in 3 months we'll be able to get him connected to GM or Ford or Ram or whoever he wants to go through, and he'll be able to do that all under commercial lines. So any other questions? Otherwise, that's really all I had for the day, but I'm always open to answer any questions and concerns or curiosities that people have. Cool. If you guys are interested in signing up with me, feel free to reach out afterwards and we can talk about what that looks like. All right.
Thanks, Paul. Appreciate it.
Thanks, guys. Yep.